Yo, what's up, guys? It's Josh. It's week 2, episode 2 on MCubed. Welcome back to what we'll call Money Mondays. But before we start, short disclaimer. I'm not a financial advisor, nor do I claim to be one. Everything said here is for educational and entertainment purposes only. That being said, these are my opinions, so feel free to disagree in the comments below and let me know what you think. Let's get started. This week I want to talk about what a stock shortage is. You may have heard of the term before because of the whole GameStop stock situation where we were seeing GME skyrocketing in price while some hedge funds were losing millions of dollars up to billions of dollars. But let's start with the basics. When a company is publicly traded, it sells shares or a stock which is represented by a portion of ownership in the company. A company does this in order to gain additional funding to invest in themselves, create new products, and expand into new buildings or whatever they need to continue growing. If a business continues to make money, the investor wins and the company wins. Similarly, if the company loses money, the investor will lose a percentage of their stock's worth. A short sell occurs when a hedge fund, which is basically a group of investors, chooses to borrow shares of a company from a third-party lender. This is similar to trading on margin, only instead of borrowing from a broker, the hedge fund borrows from someone else's money to leverage an investment in the hope of making money and agreeing to pay back the shares at a later date, with interest obviously. When a hedge fund sells the shares that they've borrowed on the market, it puts them in a very interesting place because they've promised to give back the shares, not the price they've sold those shares for. So if the value of the share drops, it's cheaper for the hedge fund to buy the shares off the market and return them to the account. All the money they've saved in the process is theirs to keep. A squeeze happens when the price of a shares goes up instead of down, which is not what the hedge funds want or expect. In order for the hedge fund to cover their loss, they need to buy back the shares at a higher price. The more these hedge funds purchase, the higher the share price becomes. And because of the increased demand, this creates a scarcity of shares in the market. This leads to a company gaining enormous value over a short period of time. Take GameStop and Wall Street bets for example, when shorting the stock was actually riskier than owning it. And what is short selling? It's basically a bet against a stock or a company. When you buy a share, you expect the price to go up, and when you short a stock, you expect the price to go down. When you own a stock, the maximum amount of money you can possibly lose is whatever the amount you have invested in. If you buy $50 worth of Apple, and Apple crashes to zero, you're out $50. That's fine, that's simple. But with short selling, if you short Apple at 50 and they release a brand new product, and this causes Apple stock to hit $500, you have the potential of losing $450 or even more. The market is infinite. How does the stock price go up? To understand this, we have to understand supply and demand. The price of a stock will change every day. The more people want to buy a stock, demand, then sell it, supply, then the price moves up. Similarly, if people want to sell a stock rather than buy it, there would be a greater supply than demand, and the price would fall back down. So to recap, a stock shortage is when there is a higher demand for a stock than there is greater quantity supplied. In this situation, consumers won't be able to buy as much stock as they would like, therefore increasing demand, which makes the stock price go up in value. I hope this helped you understand what a stock shortage is. Moving on from the stock market into the crypto market, more specifically the NFT market. On last week's episode, we actually talked about two NFT projects, NBA Top Shot and Cryptopunks. But today, I want to go in depth over Cryptopunks and its history. Cryptopunks was created back in 2017 by Larva Labs. It was inspired by the London punk scene. CryptoPunks are one of 10,000 unique 24 by 24 pixel cartoon characters that are described by Larva Labs as punky looking guys and girls. But besides humans, there are apes, zombies, and even alien punks. Each punk is different and there are no two alike. This is what gives CryptoPunks its rarity and value. If we look on the CryptoPunks website, we can actually see a full list of attributes, from race to headwear to accessories all the way down to clothing. CryptoPunks are the first non-fungible token or NFT on the Ethereum blockchain and set the ERC-721 standard. Originally, the CryptoPunks could be claimed for free by anyone with an Ethereum wallet. All they had to do was pay the gas fee, which was around 11 cents at the time, but all 10,000 were quickly claimed. Now these NFTs go upwards of 15 ETH or 38,000, which is actually the cheapest punk you can buy on the market today as of filming this video. The only way to purchase these NFTs now is from someone through the marketplace on Larva Labs website or OpenSea, an NFT marketplace where people can buy, sell, or bid on available NFTs in the market. Now, speaking of the market, I wanted to quickly talk about Larva Labs, and what's interesting about them is that they actually have released a new project. Their third project named Meebits, which was released back in May 3rd of 2021. Meebits are 20,000 unique 3D characters that were created by a custom algorithm that randomizes the attributes of these characters, similar to the way CryptoPunks works. They work on the same principle of the ERC-721 standard that governs ownership and are integrated in a no-fee marketplace where potentially you could trade up to 100 Meebits per transaction. This is all according to Larva Labs. At the time Meebits released, Larva Labs actually gave them away to current Cryptopunk and Glyph owners, which is another project by Larva Labs. That only left 9,000 Meebits that were left available for the public to purchase shortly after the release for holders. These Meebits sold out in 24 hours. Another interesting thing about these Meebits is that owners will actually get an asset pack that includes a full 3D model where you can use it to render or animate your Meebit. This is all for today's episode. Stay tuned for next week's. I'll be talking more about the stock market and new interesting NFT projects. If you have any questions, you can reach out to me on Instagram.